A couple of days ago, Frida and George asked me, is the financial crisis over? And I said, no, it's not. But let me call this report the dying legacy of the financial crisis. It's not dead, but it is dying. Investors were reminded of this earlier yesterday when the data analytics firm CoreLogic talked about the number of foreclosures completed in the month of August. It says it fell by 33% compared to the same month last year. Now, mortgage rates fell yesterday, again today, but at a gentler pace than before. It brings them to a new 4-month low with no meaningful economic data to influence rates. So the positive momentum today was more of an epilogue to yesterday and the day before's main storyline. The conforming 30-year fixed rate, that is best execution rate, is about just over 4%, with the improvement coming in either the form of lower closing costs or higher lender credit, depending on the scenario. Now, according to President and CEO Anand Nathamali of CoreLogic, he says foreclosures and delinquency rates continued their rapid descent in July. Every state posted a year-over-year decline in foreclosures, and serious delinquencies fell to the lowest level since December 2008. Now, the impact on the inventory of homes in some stage of foreclosure has been palatable. The national foreclosure inventory has fallen considerably over the past 12 months, and it was the 24th consecutive month with a year-over-year decline. So, as of August 2013, there were approximately 939,000 homes in some state of foreclosure. That, though, is compared to 1.4 million in August of 2012. So, to say this trend is welcome, though ongoing, it's a development, it's an understatement. Indeed, if there's one thing that's haunted the U.S. economy over the past 5 years, it's the state of the housing market, and the fear of foreclosure stands above all other concerns. It's devastated consumer credit ratings, it's weighed on bank balance sheets, and competed against the construction of new homes, the latter of which create between 2 and 3 jobs per unit. All told, an estimated 4.9 million homes have fallen prey to it since September of 2008. Now, of particularly welcome relief to the nation's biggest mortgage lenders was news that the rate of seriously delinquent mortgages has dropped by 25% since the previous July. Now, if there's one thing other than legal costs that have led to losses of the nation's biggest lenders, it's been souring mortgages. But let me read this. This is another in that continuing report. Rates remain on their trudge downward. If you missed the boat earlier in the year on a refinance, it may be time to stick your toes back in the water. Rates are not yet what they were in April, not yet, and of course, frankly, they may never be, but they're close. But you still may be able to get rid of mortgage insurance, take some cash out, and lower your current rate or term. Those in the purchase game will save $2.83 per $1,000 borrowed for each eighth that the rates decline. I'll say that again. $2.83 per $1,000 borrowed for each eighth that the rates decline. That can be significant. Fall, a wonderful time of year. Suffice it to say, despite this handful of beneficiaries, the continued progress is unquestionably good news for the economy overall and the housing and banking sectors in particular. And last, but certainly not least in this report, the best value in financing ends November 15th. That's right, next month. Fannie Mae's 3% down goes to 5% at that time. Now, if I can say that another way, if the loan is pre-approved by November 15th, the borrower can take advantage of two things. One, the lowest down payment out there, with the exception of VA, which of course is 0%. And number two, the lower insurance payment. The upshot of all this is to drive borrowers back to FHA with its 3.5% down, and of course it's a slightly higher interest rate. So, if this looks like it might be something that you or someone you know has interest in, simply hit reply up above. Tell me about it. Time is of the essence. Even one day delay right now can completely sink someone who can only come up with a 3% down right now. Really, reply above. See you next time.